Hello, everyone. This is Matthew Frailey, founder of BreakpointTrades.com. Founded it 21 years ago, back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, such as our 21 SPY and ES mean reversion systems, our famous KISS trend following systems, etc. Anyway, guys, going to do a quick video update for you prior to the long weekend for Memorial Day. It is currently Thursday, and it is about 6:30 in the evening. This is our backend recorder for our standard web page format for our subscribers. And I'm going to go ahead and get this started right now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Thursday, May 23rd newsletter. By the way, tomorrow is my birthday. I'll be 52. Anyway, tonight's newsletter, as you can see, divided into 5 major sections. Got my opening statement here. I'm going to talk about some of the mechanical systems a bit. We still have an open SPY or ES breakout trade from the breakout system from the mean reversion section. There's a fairly tight stop on it. It's getting pretty close. We still have one open contract there, which I'll discuss in a moment. Also going to do talk about the KISS systems we're planning to launch after the holiday. We'll look at the general market indexes, the Dow and S&P, Russell 2000. We'll look at a few indicators. We'll look at some sectors, the dollar, Bitcoin, crypto stocks, commodities, precious metals, GDX. We'll review a few recent trade setups. Again, as far as the market, we're now entering holiday mode. In fact, most of the professional traders are gone now. So tomorrow, Friday, is going to be a very light volume day. I'm kind of hoping we drift higher, quite honestly, which I'll discuss in a moment. As far as key news items this week, as you know, we had NVIDIA earnings yesterday. All eyes were on that, and NVIDIA popped on that, as expected, though I don't think it popped as high as people thought it would. And also, for news, we have durable goods, Michigan sentiment on Friday, my birthday. All right. But again, market, as you know, popped yesterday on NVIDIA, or popped in the evening, popped after hours on NVIDIA. NVIDIA popped this morning. But while NVIDIA gapped up and closed 9.3% today, though it's off the highs, the early gains this morning in the tech and other semiconductor areas were given up, with many closing down. In fact, breadth was actually very negative this morning before the market sold off. Again, it was a pretty nice down day for the market. The Dow Jones lost 1.5%. The S&P lost about 0.75%. Triple Q's NASDAQ lost 0.44%. And the Russell, that's the small caps, lost 1.6%. Also, it was a pretty broad decline because all 21 of the market sectors we follow closed down. The other thing that I talked about on the weekend, and we've been discussing it this week, that was starting to show an early sign of weakness was transports. Transports have been really lagging. In fact, they looked like a head and shoulder pattern earlier this week, and they're breaking down. I'm kind of wondering if that's a little canary in the coal mine, so to speak. Remember Dow theory? The transports have been quite weak, and they look pretty bad. Bitcoin was down for today, as most commodities, except for the agriculture area, such as DBA, corn, wheat, coffee, sugar. Precious metals finally had a nice pullback over the last couple of days. Gold was down 2.3% today and 3.3% for the week. Silver also sold off quite nicely from that supply zone I discussed on the weekend. It was down 3.3% today and 2.6% for the week. The mining stocks have also been leading down. I do think we've seen a top here in this area for a while. Remember, this is now the weak seasonality time frame of the year. So we may need to see a larger ABC pullback on the precious metals. Maybe gold goes down to the 2000 area again, something like that. Don't get me wrong though, guys. Long term, I really like this group, and I think good deep pullbacks are going to be buying opportunities, but it got very extended, and I think that needs to be worked off. Anyway, let's get started with things. So first image below here, item number 2, as I already stated above, we still have this open breakout long on the ES futures from the SPY and ES mean reversion systems. So this trade, the breakout went long on May 13th, right here. And we've pushed nicely higher. Now today pulled back quite a bit. It's still long. That said, if you look at the trades for this year, for 2024, we've had 15 mean reversion systems trigger for ES futures, similar on SPY, which I'm not showing tonight here. But anyway, on the breakout, we took one contract off on May 16th, and we made about 100 points on that. Okay. We left the open contract for the system. The current hard stop is 52.62, which got pretty close to being hit today, but it didn't hit. So that trade still up about 200 bucks. But again, the nice thing is that stop is above the entry. So it's a positive stop loss. So we'll see if that gets hit or not. Even if it gets hit, it's still going to be, that trade will be profitable. And of course, we locked in, remember, already half of those gains previously in the previous week. So far this year, the systems would have made about $14,430 if you followed these small number of contracts. Remember, these are micro. The MES, that's the micro contract. Next, image number 3. So this image is from our KISS trend systems on the website. Again, you can see here today, AMD, Bido, and NVIDIA, of course, had a new smart trailing stop. NVIDIA is, that trade's currently up 16.12%. And actually the previous trade, when I took this image, it wasn't updated. Actually, I have it updated here now. Let me show you. So the previous trade at NVIDIA made 63.4%. And this trade already is up 16.12%. The KISS systems have done fantastic this year. Again, not every trade's a winning trade. You know, there's a couple losers in here, but overall, it's been fantastic. And there's still quite a few of you who haven't been following the KISS systems. You should start doing so. But I mentioned this, guys, because next week, sometimes after my programmer James gets back, we're going to launch this system. Remember, there's weekly versions along with the daily. There's the premium, that's the higher performance stuff, the intraday KISS systems, 60-minute, 130-minute, etc. So those can trigger intraday. And we're also going to give everyone SMS text notification with all this. This is going to come as a subscription. We're going to offer a monthly and a 6-month. And I will give a coupon for the 6-month. Again, that's the better option. Again, we were hoping to launch this before the holiday or around the holiday, but I think it's best for me to wait for my developer to get back just in case we run into issues. But again, after he gets back, after the holidays, we're looking to launch this, guys. And of course, they'll have a detailed video on it, emails, stuff like that. Okay. Again, it's been a great resource. We've had this live for about a year and a half. We haven't had the premium to the public, but that'll be coming for all of you guys. And really, there's a very unique product, this KISS system. We have it running on 750 stocks and ETFs. Quite honestly, there's nothing out there like it. It's really cool. Anyway, let's go and move on. Back to the general market newsletter. So item number 4 shows the index sector table, what transpired today and this week. Again, bloody red today, as you can see. Look at this sell-off on the indexes. Huge moves down, 1.5% down on the Dow, 0.75% down on the S&P. The S&P lost about 40 points today, 1.6% on the Russell. For the week, most things are down here except for the NASDAQ. That's still holding up. Remember, NVIDIA is a big portion of that. Otherwise, big drop here in the Dow. That's been leading down 2.35%, and the Russell down 2.3%. And the 21 market sectors we follow, every single one were down today. So it was a broad-based decline today. And for the week, not too pretty either. Most sectors are down. The only thing up, semiconductors, which again, let's be honest, NVIDIA is a huge weighting on that, so it really skews that. And you got technology, same deal. So really the only thing up there this week is tech, semiconductor, and drugs. Everything else, solid red. Currency-wise, US dollar up 0.14% today, up 0.6% this week. Bitcoin, it's been pulling back with the market, still up for the week though. Now, Bitcoin is interesting, guys. To me, it tends to be more of a leveraged play, kind of on the NASDAQ. It's somewhat correlated. So if the market does have more of a pullback, I think Bitcoin's going to struggle as well. As far as commodities, The index, DBC, was down 0.5% today, down 1.5% for the week. Crude oil down 0.9% today, down 3.4% this week. Natural gas finally pulling back. It hit its 200-day moving average on UNG. So logical decline. Hope you took some profits. Still up 11% for the week. Copper, uranium down. Now the strength in the commodities were in the ag area. Okay, agriculture, corn, wheat, coffee, sugar, all up strongly for the week as well. Precious metals, as I already stated, big pullback here and pretty nice pullback this week. I think we have some sort of nice intermediate high in place for precious metals. Okay, and I think we're due for at least a decent ABC correction. But again, long term, I think this area goes much, much higher. But we are in the weak seasonality time frame of the year, so I wouldn't be surprised if this needs to work off, consolidate for a while now. As far as the bond market, little bounce today in the 10-year, 30-year Treasury yields. Next. Item number 5 shows the economic news calendar. As I said, on Friday, we have the durable orders and goods Michigan sentiment. And again, Friday is going to be kind of a ghost town, guys. Most of the pro traders are gone. You know, a lot of normal people are gone or making plans or traveling. So it's going to be a very light volume day. Be aware of that. All right, let's go and jump to the charts. So first chart below, item number 6. Here's NVIDIA. So NVIDIA, again, everyone was anticipating those earnings yesterday. And they beat, obviously, they beat nicely. And after hours last night, NVIDIA was trading up around 1,000. It went up higher today. It went as high as 1063. But honestly, it's not as big a reaction, I think, as some people were expecting. But again, we all know AI is the huge focus. There's going to be a lot of money in this going forward. NVIDIA is the big dog. And anyway, but NVIDIA cannot hold the entire market up. All right. Anyway, nice move up today, though a little bit off the highs. Next, here is Apple, chart number 7. So Apple, big sell-off today, down 2%. Apple basically got near this supply zone, resistance zone. It was quite overbought here. You had some CCI divergence. So nice big sell-off today. Next, chart number 8. Here's a 2-hour chart that I've been posting for our subscribers over the last couple of days. So on the 2-hour chart, Apple had a very obvious rising wedge with a MACD divergence. Whenever you see that, you have RSI divergence too, and you're right into a supply zone where you see right here. This was just a very objective short, and it broke down. The next big demand zone is down into here, but nice. That short's playing out nicely. Next, moving back to the index charts, chart number 9. Here, I want to look at the weekly charts of the indexes here. So I've been talking about this the last couple of days to our subscribers. So now it's time to show here on YouTube. So here's a weekly chart of the Dow. So the Dow, again, all these indexes made new highs, but that new high came with RSI divergence and MACD divergence. All right. So on the Dow here, notice that this is what I call a MACD kiss stochastic overbought short setup. It's where the MACD is pinching underneath its signal line, while at the same time a stochastic, such as a 10 or 14 link, are overbought. Usually it doesn't happen. Usually when those stochastics get overbought, the MACD lines have already crossed up. So this sets up an objective short. Your trigger is taking out the low of the previous candle, which actually occurred here today. It took out the low of this candle. So that could have been a short trigger with an immediate stop right at those highs. Again, we'll see what kind of pullback this is. Is it just a minor little wave forward and we go right back up? Or does this need a little more time? We'll see. I'll comment on that a little bit below. Next, chart number 10, here's SDOW. That's the ultra inverse ETF for the Dow. So obviously you have the opposite setup here. You had a MACD kiss stochastic oversold setup. Got a nice little doji. That would have been a long trigger right over the high of that trigger. And when you trigger there, you're put an immediate stop right at the low, very tight. We'll see how this plays out. Next, chart number 11. Here's a weekly chart of the S&P 500. Again, you have the same thing: RSI divergence, MACD kiss, stochastic overbought setup, potential short. Now, this one hasn't officially triggered on the weekly, but we have a potential doji candlestick. So if tomorrow on Friday, if the market drifts up a little bit, just chops around, we're going to form a doji. Then you got a very objective setup here to watch next week after the holidays. Your short trigger would be taken out below this candle by 1 penny. And if it triggers, your immediate stop goes right at the high. It's a very objective setup, right? Yeah, I'm not looking for a major correction here, guys, but it's possible that we could see, 150, 200 points off the highs in the S&P, and that could be a little nice trade. Next, chart number 12, here's the same setup, but instead on the indexes, which you can't really trade, here's the SPY ETF. Again, you can see the potential setup here. Again, this would be a potential setup for next week with this MACD KISS stochastic overbought setup here. Again, your trigger is off the candlestick, though, not off of this. Next. Here's the inverse ETF, SDS. You have the same setup. Obviously, it's reversed. Stochastic, MACD KISS stochastic oversold setup, and your trigger would be over the doji high here from Friday once that closes. Next. Chart number 14, here's the SPXU. That's the triple inverse ETF, same setup as well. And again, these are things to watch coming into early next week. Next. Chart number 15, here's a weekly chart of the Qs, which are still up 0.4% for the week. One thing to note here, guys, you have a very obvious big weekly rising wedge forming. You see that? And you have 5 waves in this wedge. 1, 2, 3, 4, 5, working on this wave 5. All right. You have also a MACD KISS stochastic overbought short setup here. Now, again, this wedge, this weekly, it may, need to chop around in here for a while before it really breaks down. Remember, this is a weekly chart, guys, but when this pattern eventually tops, maybe later in the year, that could set up a much better high in the market. Definitely something to watch going forward. Okay, moving on. Chart number 16, here's a daily chart of the S&P. Again, nice big sell-off today, down about 40 points. You can see that bearish engulfing candle, basically retesting the March, April highs there, which are now a support area. And you can see we did bounce off of that. Again, the bullish case would be we've had a little wave 1, 2, 3 up, and this is simply a wave 4 pullback. Personally, I doubt this wave 4 pullback is done on just this one candle. Again, I think we likely bounce on Friday just because it's a holiday, light volume. Before the holidays, typically the markets like to bounce a little bit anyway, so I wouldn't be surprised, but I don't think this correction is just done over with one down candle. I think it has more to go, all right? So this wave, again, price could pull back down into this zone quite easily. 20-day moving average, 50-day moving average, perhaps. We'll see. But it is something to watch. Now, once that is complete, then I'm looking for another move up to a new high in a wave 5. Next. Chart number 17, here's the S&P 500 chart. This is our stochastic Momo system. And I've talked about this a lot during the spring time frame. Again, as you know, the market had that major bottom in October, and then it just had this awesome rally from that time, where especially from the December to the late March time frame, very small pullbacks. And it's what you had is where the 60 link stochastic got over 80% and trended, it embedded above 80. Whenever you get that happening, you can use these short-term indicator oscillators as mean reversion systems. An RSI2, 1% 5, fast stochastic 4 length. As you can see, every time these got oversold, these fast oscillators, while the 60 stochastic remained embedded above 80%, that's the key. It's got to stay above 80%. These get oversold, provided you all these nice bounce trades, as you can see here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades it provided you. Now, one for the bull case here would be that the 60 stochastic is back above 80. Now, it hasn't been trending for a long time. It's just been over here for about a week and a half, 2 weeks. But now, those fast oscillator indicators are now oversold. So it also wouldn't surprise me, like I said, if we get at least a bounce tomorrow. Okay. Next. Chart number 18, here's the KISS trend system for the S&P. Again, no changes. Smart trailing stop is still 51.70 approximately. We had the Mark 913 combo, so that's something to take notice of. Those are usually pretty reliable, and you had a nice pullback today. Again, we're still well above the smart trailing stop at the moment. For the bulls, what they'll want to hang their hat on is that the moving average ribbon, you can see here, is bullishly stacked. The BPTMA turned red here. So it's possible, as long as this pullback here, these moving average ribbons pinch, that could be your higher low buying opportunity. But they probably need to come together a little bit more, would be my guess. That's why I think this pullback correction has a little more to go to it. Next. Chart number 19, here's the 4 time frames. First off, the daily up here. We had a DeMark 9 and 13 as already discussed. Also, we had a resistance cycle all week, and that has been basically capping price, as you can see. Now, the ATR is supporting all the time frames for now. Okay. Next. Chart number 20, here's 2-hour view of the S&P.
Aussie tourists. I remember back in the 80s.
Sorry about that. Let me turn that down. CNBC. So some wave counts here. I'm not going to get much into this, guys. It's possible we had a little wave 5 here, and then we need to have some sort of ABC correction here. The next big demand, there's an open gap here, which I'll show you on some charts below that I have highlighted. That could be an immediate target, filling that gap. The S&P likes to fill these gaps. But the next big demand zone is down around this area, 5220 or so, 5220 to 5240. Next. Chart number 21, here's a 60-minute chart. So here you can see that open gap. We got a little bit into it today, but bounced. Ultimately, I think we fill that gap as we usually do. And then you can see your bigger demand zone here below. Chart number 22, here's a 30-minute chart. Again, you can see the gap there, which we got a little bit into, didn't fill it quite. By the way, this area, so let's say we bounce up on Friday. This area here is now resistance. So let me draw it in. So this area here is resistance. So if we were to bounce on Friday, don't get too bullish unless it goes way up into here, because it's possible we could bounce up into here, then fail. So it's something to think about. Okay, clear that out. Next. Chart number 23, here's the NASDAQ. Again, very similar look to the S&P. Nice pullback, still above its 9 EMA. Like I said, again, to me, this high appears to be some sort of wave 3, and we're going to start working on a wave 4 pullback. Chart number 24, here's another chart of the Dow, or the triple Qs. You can see pullback. There's a little slight demand zone, which we did bounce off of today. Again, this previous resistance here around 450 is 450 to 449.50 is now support. Okay. Chart number 25, here's the KISS trend system for the Qs, very similar to the S&P. You have the DeMark 9 and 13. Nice sell-off today. We're still well above the ATR. We're still well above the last smart trailing stop. If this next week, if the pullback continues, watch the moving average ribbon here for some sort of pinch. Next. Chart number 26, here's the 4 time frames. Again, the daily here. We got a bunch of A's here. That's amateur buying. And those usually mark some sort of short-term high. And you can see a little pullback on the rest of them. We're still holding the ATRs in these time frames. Next, chart number 27, here's a 60-minute chart. Again, that last high set up a pretty obvious RSI and MACD divergence. Now, there's an open gap here in the Qs, but it's a little bit further below than on the S&P. Of course, there's a big one way down here, but let's not even talk about that one. The first potential move on a target on a move down would be filling this gap. Chart number 28, here's a 30-minute view. I added some fibs here. So pull back off the highs. Got pretty close to the 28.6 fib. Again, there's that open gap here, which to me, which would be a magnet over time. And your next bigger support is down around this area. Next, chart number 29, IWM, small Russell 2000. So remember, we had that perfect textbook ABCDE rising wedge into March, early April, which with the MACD divergence, that obviously played out for a big sell-off. Price got near the 200-day moving average, bounced off the demand zone, and you can see rallied all the way up to this resistance zone where it's pulled back from. Chart 30, here's the 2-hour view of IWM. Remember I talked about this negative divergence in the weekend, and you can see so far it's produced a nice pullback. By the way, IWM has a gap below as well, just like on the SPY, the triple Qs on the S&P. So there's open gap down here, which to me, at minimum, would be a target over the short term. That does it on the major indexes, guys. Futures tonight are up just a couple points. They haven't moved that much. Let's move on. Let's talk about the VIX. Here's the VIX. Nice bounce in the VIX today. You can see it tagged its middle Bollinger Bands, rejected off of that for now. Remember, I've been talking about this RSI 5 divergence that it's set up. So that's set up today, or that's been set up, this positive divergence, and finally producing a bounce on the VIX. Next, chart 32, here's the VIX that Steve was showing on Wednesday. There's a big support zone here where the VIX got into and bounced. And you can see that RSI divergence. Next, chart 33, here's the 2-hour view of the VIX. Remember showing this channel with the divergence. And we did break out of the channel. We pulled back off this initial supply zone for now. Now, if the VIX tries to rally again, there's also an open gap up here that could be a magnet. By the way, one chart I forgot to put in here tonight is the VVIX, and it is actually outside its upper Bollinger Bands. That's actually notable because a close back inside its bands could be a VIX Bollinger Band buy signal. Went ahead and added the VVIX chart here, guys, just because I wanted to show it. So the VVIX, unlike the VIX, actually closed outside its upper Bollinger Bands. That's actually quite notable because actually it closed back inside its Bollinger Bands, like you see back here, right here, would be a buy signal, okay? And that's going to be fairly reliable. So take note of that. It closed above its upper Bollinger Bands. The other thing that happened, and I'm not showing it tonight, is both the NIMO and NAMO McClellan oscillators closed below the lower Bollinger Bands, okay? Finally, chart 35, here's the NASDAQ with some of these indicators, the new 52-week highs, new 52-week lows, and the difference. So one thing to note on the new 52-week lows, we got a spike outside the upper Bollinger Bands, okay? Now, sometimes this can occur near trade lows, okay? In fact, it does a lot of times. You had it right here, you had it right here in March, you had it in January right here. You also had it here at the October lows, the September lows right there, and the August lows. So, that's something for the bulls to hang their head on as well. But again, doesn't mean you pop right away. You could also get, a few of these. Sometimes you can get 2 or 3 of these above the Bollinger Bands, but just showing you that it did close outside its Bollinger Bands. So despite the fact that we were at new all-time highs today, the new 52-week lows spiked outside their Bollinger Bands. Next. Moving on, bond market. Here's high yield corporate. They're pulling back, lost its 20-day moving average today. Always want to keep an eye on that because the market tends to follow this. So that's been weakening a bit. Key support's really that 50-day moving average. Chart 37, here's the 10-year treasury yield. Remember that broke its uptrend channel over a week ago. It's now back testing the channel where it's finding initial resistance. That's definitely something we want to watch. Chart 38, here's the TLT 20-year bonds. They have the opposite look to the rates. They're in a downtrend channel. Next, reviewing a few of these market sectors. Here's XLK Technology again. Gapped up today, closed down. So off those highs. Chart 40, semiconductors, also briefly made a new high, but closed down for the day. Chart 41, here's the transports, IYT ETF. Look at this. Definitely has what almost looks like a textbook head and shoulder pattern. I talked about how this was weak on the weekend. So in the weekend, I talked about how the moving average ribbon was variously stacked and it was pinching on the underside where many times you get your lower highs. Well, that's ended up being the case this week as we've sold off strongly. Now it's right at the 200-day moving average here. We could bounce, but if we get another nice down candle, this could really start to unload. And the Dow used to have a much stronger effect on the market, the transports. Remember the Dow theory, but I'm kind of wondering if this has been an early warning sign that the market's kind of ready to pull back. Just pointing that out. Chart 42, XLF Financials. Remember they made a new high, but now they're pulling back as well. Main support here is this 50-day moving average. Chart 43, Utilities. Also a big old pullback today. Again, they had a hell of a run, so not surprised to see this. Slicing through that 9 EMA, next support would be the 20-day. Moving average ribbon is still quite wide here, so that probably needs to be worked off. Chart 44, XLI Industrials. Essentially, we have a double top here. So I was wondering early in the week if this was going to flag out and try to break out, but instead, looks like it's almost breaking down. Hasn't quite lost its 50-day moving average here, but it's definitely an ugly candle. If it loses this, then I think we have a pretty nice high in place here. Chart 45, IYR Real Estate. Nice sell-off here this week so far, slicing below the 50 and 20-day moving averages today. Chart 46, XLE Energy. But a little wedge pattern here, which has been playing out. There is a small demand zone here. And again, it's not a huge support, guys. If we don't hold that, there's an open gap down here around the 89 area that I think would be a target. And of course, the 200-day moving average could be a lower risk area to buy some energy stocks. Finally, chart 47, here's the Chinese ETF. This is the triple ETF, YIIN, yen. You can see how it rallied up to the supply zone where it's pulled back from. Now, there's a demand zone here. So I think into this demand zone could be an area to perhaps dip your toe if you're looking to buy the dip on this. Again, it was a heck of a trade, though, from the April lows out of that consolidation. Next. Moving on to commodities, here's DBC, the index. Still, remember, it's been in the confines of this coil for almost 2 years now. So it tagged the upper trend line of the coil there, pulling back. Chart 49, crude oil. Again, that little bounce was stalled right at the 200-day moving average. Remember, once it lost that 200-day, it became resistance and selling down again. Now, the one area to watch would be the 61.8 fib. We'll see if that can hold or not, but definitely looking weak. We do have a little RSI divergence at the moment. Chart 50, UNG, natural gas ETF. One hell of a trade out of this falling wedge that we were showing back in April. Again, rallied all the way to the 200-day moving average. That was an obvious place to lock in some nice gains. Look at that big down candle and the volume. Chart 51, here's the monthly chart of natural gas going back to 1995. So, 29 years. So the reason why that UNG was a really low risk long was because price got near that 150 area, and you can see that 150 area has acted as support for the last 29 years. Next, chart 52, Dr. Copper. Remember, this has been going parabolic, finally pulling back here. 20-day moving average is your first support. If you lose that, then I think it moves down to the 50-day. So again, it's had a hell of a run. Not surprised to see some consolidation finally. Chart 53, here's the weekly view of copper, down 5.1%. So that's a big move down. Remember, it made new highs, so pulling back. Nice move out of that coil, though, from early in the year when we spotted it for you guys. Chart 54, DBA, as I stated, the strength today in the commodities was in the agriculture area. So DBA, again, remember DBA, we had it as a long setup back in January out of this coil, rallied very nicely, got kind of parabolic overbought, MACD divergence, RSI divergence at those highs. Nice correction. It bounced into the demand zone, formed a lower high, came back into the demand zone again, and nice rally. I was wondering at the time if it was going to come down to this next demand zone, which I would have liked, but instead it's rallied off of that once again. Chart 55, here's coffee. It's had a nice week, up 6.7%. Don't tell Starbucks. They'll want to raise the latte prices. Let me ask you guys, do they ever lower it? No. Chart 56, zooming out on coffee. Here's the big picture view going back to the early, basically 1980. You can see, again, kind of the bigger pattern. It could be setting up a Gosh, what is this? A 22-year coil? Long-term resist long-term resistance that really coffee hasn't been able to break above is around this 310 area. Next, moving to cryptocurrencies, here's Bitcoin. Again, Bitcoin had a nice rally once it broke this downtrend line in mid-May, but stalling at that supply zone. Again, this is likely going to move with the market. So if the market wants to have more of a correction, I think Bitcoin does as well. If the market wants to have a very shallow correction here and go right back to the highs, then I think Bitcoin follows. Here I added an uptrend line to watch. Driver 58, Ethereum. Now this really popped this week. I talked about this on the weekend, this wedge pattern. Huge pop on Monday, and it was even up today a little bit, though off the highs. One of the old ETFs that we played was ETHE, and we had a really beautiful tight setup here. You know, trigger was around that 22 area. Hell of a move, guys, in just 1 week from $22 to 34. Excellent percentage move. Hope you took some profits. Some individual stocks. Here's MSTR. Remember, 2 weeks ago we had this as an inverse head and shoulder pattern. This played out nicely. Hope you took some profits up into there. Pulling back. Now it's around the 9 EMA. Driver 61, CLSK. This one was up nicely early in the week, but it's pulled well off those highs. Next, driver 62, US dollar. Remember, it bounced off this uptrend line. Little bounce today. Driver 63, here's the weekly view of the dollar. Really the best way to look at it. It's up about 0.7% for the week. This is your support. This is your resistance. Okay. Moving to precious metals, Driver 64, gold. Big sell-off here. Remember, it made a new all-time high there, 24.54. But that next high, very obvious MACD divergence. You see that? Obvious RSI divergence. And to me, that last pullback was an ABC wave 4. That looked like a wave 5. So if that completed a wave 5, this is likely due for a bigger ABC correction. Something like this. Let me draw this in for you. Something like this. Boom. Maybe it gets down, maybe target over time would be this next demand zone here, 200-day moving average. To me, those would be an awesome area to go long gold again. Gold typically is weak this year, this type of year, seasonality, usually from late May into July. So maybe that'll unfold now. First support, otherwise, is the 50-day moving average. But it looks like we could have a little fifth wave high in there. Watch this ratio. Still holding the trend line for now, but keep an eye on that. Driver 65, silver. Now the silver doesn't have a MACD divergence. It's been stronger than gold. Remember, it broke out of its ascending triangle, back tested it. Great area to go long, by the way. Rally to a new high. But it got very overbought early in the week, and it's pulling back. Driver 66, SLV ETF, silver ETF, down 4.3% for the week. Driver 67, there's the monthly view of SLV. Like I said, we've had a major breakout from a 4-year coil pattern. Again, even if this consolidates for the next month or so, it's fine. Long term, I think it goes much higher. I'm a buyer on major dips. First main target would be the supply zone over time. Next, driver 68, GDX. This is the weekly chart. You can see stalling at this weekly downtrend line I mentioned on the weekend. Also had a little RSI divergence. Driver 69, GDXJ, same deal. It tagged its supply zone, which I talked about on the weekend, and logically pulling back from that. Driver 70, GDX on the daily, nice pullback. Just like gold, you have this last high produced a pretty good MACD divergence. Today it closed just below its 20-day moving average. Here I added some fibs as guides on a pullback. First big support would be this 50-day moving average around the 38% fib. Next, driver 71, here's Dust. That's the 2-time inverse ETF. I mentioned this early in the week as a hedge for a pullback in the metal stocks. And you can see it's provided a nice bounce the last couple of days. Up 4% alone today. Nice MACD divergence at the lows. Reviewing a few individual setups from the weekend pause. That's the weekly silver stock. You can see how it's got right into that first supply zone and logically pulling back. Again, long term, I think this goes much higher, guys. But, again, maybe this is due for some sort of ABC correction before then it resumes its major trend. Next, driver 73, SVM, another silver stock. This is the weekly chart. You can see it tagged that weekly resistance pulling off of it. Driver 74, KGC, some of these daily charts, again, had a heck of a runs. They're now having their pullbacks. Hope you guys took some profits, though, by now. RGLD, same deal. Nice pullback the last couple days after an extended run. Same with EXK, little silver stock. Hell of a move. Again, we went long back here around the $1.50. If you didn't take some profits by the time it hit $4, come on, guys. What's wrong with you? All right, guys, final part of the newsletter here. We're going to review some recent trade ideas. So Irene was a long idea from early last week. One of our subscribers gave it to us, had a really tight coil. This produced an excellent trade from that $5 trigger all the way up to $8. Hope you guys caught it. Nice pullback today, finally. Driver 78, TMDX, long idea from a few weeks back, late April, still holding up here. At this point, guys, you can see the MACD's crossing to the downside. I'd put a stop probably just below that 9 EMA there. Driver 79, STNG, again, nice trade as well. Still holding the 9 EMA, but it's been a hell of a trade. Driver 80, here's Starbucks. Remember that bungee bounce setup I talked about in early May off the doji? Played out beautifully. Hit its 20-day moving average and exceeded that. Really was a nice trade. Driver 81, SLI. This is from early in the week. It was a bull flag, needed to clear that 198 area. Instead, it's pulled back. That said, there's an open gap here. The volume's been pretty light on the pullback. I would watch maybe for a low risk buy in here near the 20-day moving average with a tight stop. This could be an area where it could try to bounce again. Driver 82, ACLS from earlier in the week, never triggered. You can see it pulling back today. Driver 83, SPXU. This is the 2-hour time frame. You can see it broke out of this little pattern. There's a gap there it's tried to fill. And here's one new setup, guys. The only one I put on here, MRUS. The volume stood out on me today, but you got a little resistance right here again. Not a lot of great looking setups out there, guys. So again, my thought on the market is that we've had a nice pullback today. Maybe we bounce a little bit on Friday, but I don't think this pullback correction is done. I think we're likely to have more of a pullback next week. And that'll do it. All right, guys. I wish everyone a nice 3-day weekend. And I'll be around. And like I said, we'll all be here next week. And we're looking forward to launching those KISS systems once my developer gets back. Have a great rest of your Thursday evening. Have a good Friday and have a good weekend. Take care.